G'day there, everybody. Thanks a lot for joining me on this Monday afternoon market recap. I've got a couple of points I just wanted to make over the next 10 minutes or so in regard to the price action, the continuation of that, as to what we've seen during today's session on Monday and also what to expect for the week upcoming. It is very important that you understand this, and I am also going to go through a couple of stocks in our top 12 list that have surprised or at least sort of shrugged off that of the market activity today and have seen some really healthy continuation signals to the upside, which are starting to bring us some pretty decent profit as well. So I'll begin with the S&P 500. This is, of course, the chart of that market. We closed down 28 points. What's most important to point out as at the close on Monday is that this candlestick right here is that, or very close to, that of a bearish counterattack. Let me just show you this. We gapped up to begin the session, however, or at least we gapped up above the Thursday candlestick of last week. However, we traded more or less back down into the closing price where we finished the week of trade last week. Again, we closed down 0.28 points, but this candlestick just here is a very early bearish reversal candlestick. Now, I wanted to point out that when I say bearish reversal candlestick, I'm not talking about the market breaking below the lows that we've established in the month of August. More so what makes sense is that this market is going to at least trade on back down to this handle down here around 2,934. It may be closer to 2,940, but really what we're looking for is this market and also the markets collectively, i.e. the Dow Jones and also the NASDAQ, to trade on back down prior to any real legitimate sort of trending movement higher. It's going to be a big surprise, so to speak, if these markets just continue on their merry ways. It may happen in the very, very, very short term. However, in order to break above these all-time highs and to continue to see these markets trend into the back end of 2019, these windows down here and essentially the retest of this old resistance as new support needs to happen. So be mindful of that. Again, if you see the markets down considerably, say for instance on Tuesday or Wednesday, just pay attention to where they close and also pay attention to any lower wicks that have seemed to develop or at least continue to develop around critical areas of support. This area in the past down here at 2,840, that was a very critical area of support. That area has held. The next critical area of support is now the top range of what we were in for the period of August. That is now going to be the critical retest as new support. So again, be mindful of that. This gap is very prominent. It's pronounced. It's staring at you in the face. And essentially, a very short-term sort of magnet right now is going to pull this price action back on down to retest this critical break. Okay, and then once that happens, if we see the bid show up in the market and we see some reversal candlesticks around this 2,900 and say 40 area, that is going to be, again, the continuation of the trend to legitimately break above these all-time highs. So we still need to go through a couple of ebbs and flows in the market activity to make sort of technical sense out of what's happening, I guess, strategically in the market. But again, we are still relatively healthy, you could say, even as at the close on Monday, whereby the markets went essentially nowhere. Now, the NASDAQ closed down a little bit further, down 15.62 points. We actually retested the top of that gap support of the open gap. But again, this is just testing what I do believe is going to be a very quick retest of roughly this 8,000 psychological number. You will see probably intra-session the markets actually overshoot that, probably push into this candlestick over here, which is Wednesdays of last week. But again, you should be expecting, or at least looking for, very similarly to what we saw during, I guess, the retest of Tuesday last week, which was the 3rd, all right? A similar reaction, but hopefully in this reaction, we're not going to see these open gaps that need to be filled. It's probably going to be a slower sort of advance or ascent, which is going to be, again, or at least set up more of a sustainable move higher. Now, again, just to show you this on the Dow, this is the one market of the three anyway that closed up positive, up 38 points. This is looking like sort of an inverse, what would you call it, a little bit of a bear flag, even though technically it doesn't make any sense because price action is moving higher. It doesn't really fit sort of the dynamic of what is actually occurring in price action, but again, a little bit of a spinning top candlestick. We've got an array of candlesticks on the NASDAQ itself, just a relatively bearish type of candlestick, however, that lower wick. As I've said before, bearish a counter attack on the S&P 500. What we have here is a little bit of a spinning top. Okay, so again, short-term indecision. We're pushing above this resistance area, or the second resistance area that we're contending with, but at the same time, we still need to close this open window down here. So do not be surprised if you see the pullback or if you get the pullback in the market. It will not be a time to panic or to be fearful. In fact, it's probably going to be, again, one of those final opportunities to position yourself if you haven't already done so. And I'm sitting here before you, and part of me would be a little bit surprised if no one stood up and actually, purchased some, maybe SPY positions or diamond positions or even Q positions during the month of August. If you have done that, you are profitable in those trades. And for the majority of those shorts, they are still underwater. So again, they're looking at an opportunity to exit out of the market or to buy to close. And that's going to happen right at this critical juncture here, just sitting up above 26,250 on the Dow Jones Industrial Average. Now, a couple of shares I just wanted to recap. Again, as the market's rather stagnant today, we did see Caterpillar continue on its merry ways. We started getting interested in this stock at 120.39. This 119.24 is essentially a re-entry. But we did have the insurance policy positioned up here, at least a portion of that at 124.82. So from the original entry at 120.39, we're up here at 127.25, and this has occurred in 3 sessions. So we've made $7, right? Pretty much $7 of intrinsic value into those core positions, even considering the gap up that we saw last week on Thursday. A very profitable run on Caterpillar. And again, I'd encourage you to go back and have a look at that YouTube video whereby we spoke about this particular candlestick. This occurred on the 28th of August, which was a Wednesday. All right. So since this particular reversal candlestick, the overshooting of the market and the individual stock anyway, Caterpillar to the downside, the whipsaw, it's just been a short squeeze. And that's essentially what we are looking for as well when it comes to the market indices. So again, $7 of intrinsic value so far in 3 sessions on Caterpillar to the upside. Still looking at this stock moving up to 135, but boy, it was up very close to or just over $4.50 today. So a really nice move on Caterpillar, which is completely expected given some of the price action that we saw around this 115 area down here. Now, a very similar type of move, but not to the extent, is COP up another $1.34 today. Again, we were looking at this around 53.82. Not as profitable, so to speak, as Caterpillar, but it's certainly starting to really drill out that of a base. And to me, it looks like we've broken above the neckline. So right now, again, what we spoke about over the weekend is that we could still see a bunch of these stocks actually pulling back down to close their windows. Certainly when it comes to Apple, Amazon, and also Google. I'll touch on these very quickly after I move through COP, but right now this is just starting to get moving, which I'm very excited about. Now, the third stock here is IBM. Again, it shrugged off the market activity, up $2.03. Original entry was down here, close to 137.01. It was very similar to that of Caterpillar. And in 3 sessions, we're all the way up here at 142.60. So again, we've made over, $4? You could say $5.60 of intrinsic value into those call options on IBM. Be mindful, however, as of what I've just spoken about in regard to the markets, that is going to act or be a drag on price action in these individual companies when we do go through that pullback. But these 3 stocks right now are really doing, or at least moving, in very nice directional trends, and it seems to me that they have technically reversed, and we're positioned right at that critical reversal point, right, the tipping point of that individual stock. So we can just simply sit back and allow those profits to continue to roll in over the coming weeks, if not coming months, especially if this market really gets moving to the upside, if it continues to build traction to the upside. We got a little pop in Netflix, nothing substantial there. Microsoft is pulling back down. Good news, we have closed this window. So what we spoke about over the weekend, that has now been achieved. Let me oscillate back up to Apple because, again, a rather sort of volatile day. Closed up 91 cents, but this is what we call a high wave spinning top right at this critical resistance area. We tried to at least close the window. We partially achieved that. At least we overshot that original gap support up here. You can see that lower wick, how it sort of penetrated below that area. However, again, we still need to expect, or at least you should still be expecting Apple to at least come back to 209.48. So as it stands, a little bit of a volatile day in Apple. Didn't really go anywhere, but again, it's trying its best to close these open windows. Again, the same is true for Amazon. We've been speaking about this coming back down to, say, 1,807. A little bit of a bearish candlestick today. Nothing significant. However, don't fret if you see a long day dark Morobosa or even a long sort of wick candlestick to actually close this window. You can categorize Apple, Amazon, and also Google into similar types of baskets. Here's the candlestick of Google, another high wave spinning top. So again, we tried to at least penetrate it. We didn't do as much or as deep of a sort of a move as what Apple did. However, this 1,184 target, or at least gap fill, should be on your radar and an area to look for on Google prior to its continuation to higher prices. So again, that's why you can categorize those 3 into a similar sort of trading sort of environment at the moment, or at least a distinction in what we're looking for in price action. Boeing Airlines still treading water, but I am very excited about that. We got a little pop in Baidu today, but again, we're still following along with these Bollinger Bands. We're not in a definitive Bollinger Band squeeze yet, but it is continuing to develop. We've got Disney floating around. Again, we've got this small little area that should close over the coming days, and that essentially rounds out our top 12 individual trade list. The 3 big movers again today, IBM, COP, and Caterpillar. Right, the rest are doing their best to close their windows, but much like the markets, it's really that first initial warning that in the very short term, we should see this market turn down to retest this area, and then we should see a really nice bid to underpin these individual stocks. And I think you can begin to see the narrative, or at least see the pattern showing up in individual stocks and how they're mixing with the overall markets. And this is all very constructive. So again, be patient, be resilient, be sort of resolute in your analysis, and allow the market, when it chooses to do so, right, to pull on back down, which is then going to give us that definitive foundation and provide that of the sort of, I guess, the more legitimate and sustainable push and drive, which is at least going to come on back up and retest these all-time highs. But on one of these occasions, right, I said this over the weekend, collectively market participants are going to say we've had it, we're fed up, we've had enough of this, and we are going to see that definitive break, upon which there just simply isn't going to be all that much supply once the market really gets moving. And again, you're just going to see this absolute bin fire underneath the market itself, for the bid just really push these prices up into levels, right, that people are really sort of unexpecting at this particular juncture. I'm still looking at, of course, the NASDAQ moving closer towards 10,000. You could say that we're pretty much at 8,000 at the moment, or at least that retest is going to come in at 8,000. So you're still looking, in my opinion, at potentially 2,000 points to the upside to drill on up into that magnet of that psychological round number. And then, of course, we're just going to follow along with what the S&P 500 does. We'll see whether or not that can really get galloping above 3,000 or 3,030, where that critical break is. And also on the Dow, we're looking around 28,000, sorry, not 28,000, 27,250 to 27,300 points until we definitively see the break of these all-time highs, which is going to be exciting as well. So that's going to do us is at this Monday afternoon market recap. I'd encourage you to have a look into that Pro class if you haven't already done so. A lot of trades are brewing. And again, some really nice entry points, so to speak, when we do see these markets pull back, close the windows, and then get the pops. All right, so enjoy your Monday evening, everybody, and I'll be back with you later in the week for another market update. All the best. Farewell.